Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, everyone. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Sort of like the last earnings bonanza of the season. We have a lot of stocks reporting earnings. Some are popping, some are dropping. What we're going to talk about as many of them as we can. That includes Salesforce, PVH, Guess, TLYS, Dollar General, Signet, Abercrombie & Fitch, Campbell's, Burlington, Dollar Tree, Michael's. So a lot on the radar this morning. Campbell's also is spinning off some of their business. We'll talk about that. We'll talk about Amazon. Amazon's very fast march to 2,000. And we'll take your questions from our chat. As always, premarket.benzinga.com is one of our chats. YouTube.com/BenzingaTV is the other chat. Joel, what is happening in the overnight session?
I think I may need to reboot my computer because I'm seeing the S&Ps are down 550 here at 2909. So I'm sure that'll be corrected by the end of the show. Found resistance just above Wednesday's high. That's the all-time high, 1750. All-time closing high at 1475. Those are some targets on the upside if we get up there. 07 even, don't have anything down there, folks. Your next support level comes in at the nice round number of 2,900. Crude cleared that quad top yesterday at 69.25, now trading in the 70 handle. To be absolutely honest with you, I have no resistance in the 70 handle or the 71 handle. So not sure what we're going to do today, but no daily highs or lows to worry about in crude. Gold in the red here by 90 cents at 1210.60. Silver in the red by a dime at 1471. And the Bitcoin futures, this is the SIBO futures trading down $135 at 68.75. Just a little bit of a trading range. Triple D is fired up this morning.
Stop.
Oh my
Stop.
gosh.
Stop.
Where should we start? Start with your trading story from last night.
Okay, so our friend and frequent pre-market prep guest, Tim Seymour. Actually, I don't know if he's frequent, but he's been on here a couple of times. Did a pitch last night on CNBC Fast Money, and he was pitching. He was actually pitching on. He was doing a pair trade, and he was bearish CRON, which, if you look at CRON, the chart right around 5:30 last night when he pitched it, went from 12.70 down to 12.25, and then he was bullish. Can Trust Holdings, which is TRST on the Toronto Stock Exchange. What I found interesting was I start lighting up in my filter TRST, and I was like, oh, that's because, Tim Seymour just pitched it, so it's going up. But then I start thinking, I was like, wait a second, my filter is running U.S. stocks. I'm like, TRST isn't in the U.S. And then I bring it up. I was like, oh, yes, it is. But it's a bank. It's a bank over here, TRST. So anyways, I watched TRST go from $9.15 all the way up to $9.90. Bring up the chart, like the 3-month chart. This thing hasn't, moved more than 30 cents in 3 months. So all of a sudden it gets a pitch from Tim Seymour and everybody's buying it thinking that it's a pot stock. It's not a pot stock, it's a bank over here. So anyway, came back in. I actually was able to get some shorts off too. I was like, what the hell? So I was able to get short from 940 to 950, a few shares in there. And it's now 935, so it's trying to come in more. I would think it's probably coming all the way back down. I'm still short it right now, but it popped significantly here just because everybody got it wrong and they thought this was the pot stock, and this is actually Trustco Bank over here. So he was pitching TRST on the Toronto Stock Exchange, which is CanTrust Holdings. So moral of the story is, make sure when you're buying these pitches, especially if you're going to buy these pitches on CNBC or from any TV personality, make sure you're buying the right company. And anyways, there was a lot of shares, like 10,000 shares traded. So there was a lot of people who were buying the wrong company. I tweeted to Tim Seymour after that, and I just said, hey, did you realize that your pitch made Trustco Bank on the NASDAQ go up 8% last night? And he tweets back to me, and it goes, holy SHHHHHHHH. Obviously, he's not going to swear on Twitter, but yeah. So anyways, he's got some power, that Tim Seymour guy, but he wasn't pitching that stock. He was pitching the other one. So oops trade for a few people last night. And I don't know who bought 1,000 shares at $9.90, because I tell you, even if it was a right stock, I probably would not be buying that thing up 75 cents last night. And that's, you're talking about an 8% up trade. So crazy how these people just, jump on, and as soon as they're going to pitch, it's like there's a race for, who's going to get there the fastest to try to make the money on it. But a lot of times when they pitch these things, when they get overdone, which they often do, they're usually fades. Now, not saying that they're making bad calls, just saying when a stock goes up 8% because it gets mentioned on CNBC, usually it will come back in.
That reminds me, and this is a few years ago, I think it definitely pre-Spencer here, Tesla announced that they were buying Riviera Tool, and there's a Riviera Tool like on NASDAQ. I think it was like RIVT. And
I remember this.
And it was a low price stock, and people bought.
They got it wrong too.
They bought millions of shares in the stock.
And it's a wrong stock.
And then, the one that Tesla was buying was a private company. And it wasn't. And I don't think they ever I think it's it was a little tool and die company in Michigan is the one that was listed on NASDAQ. And everyone bought it up. And then I don't think it ever reopened again. So be careful on that. Real quick, when we get into the parade of earnings here, we got a question here from Mr. Maps talking about Celgene yesterday that had a nice little breakout here. We've cleared some highs that you had. You cleared 93, which was a hurdle in April. And maybe we'll fill this gap. That's what I'd be looking for, Mr. Maps. We have a gap up at 95.63 and 91.75 to 95.63. You had a close there. So if you're looking for another target, another gap fill in Celgene, I know, Dennis, you're happy about this one. You own it. You bought more.
I've had a long
and
time.
You whined about it, and now it's coming back.
At least it's come back. So, long story short, I bought originally back pre-split, and my average cost base was $27. When it went from 140 to in the 90s, I bought more, and that brought my average cost base up to 51. And I was like, whoa, I liked it better when my average cost base was 27, not 51. Then I watched this thing go all the way down to $75, and I was like, can I turn a huge 300% winner into a loser here because I added to it? Anyways, though, it's come back, so I'm happy now. I could actually sell probably the extra shares that I bought back at scratch, but I'm holding on to it. Long term, I still think, aging population. I like owning the drug stocks. I think they punished it way too much when it got down to 75. Is it next? Now, would I be buying it here now? I feel like you're chasing it a bit too much. Go 75. It's 94. We know a lot of the drug stocks have really had a nice rally in the last month and a half. So I don't know if I'm chasing it up here, but I still own it long-term investment portfolio, and I'm sticking with it.
All right, let's bring in Mr. Israel here. He's going to take over the reins here, and we're going to talk more than about a couple stocks.
Oh, I am. Okay, let's start with Salesforce then. CRM, kind of the big one from yesterday's after-hours session. So CRM reporting earnings yesterday. Q2 EPS, 71 cents. I don't know how that compares to the 47-cent estimate. If it does compare, it's a nice beat. Sales, $3.28 versus $3.23 billion, so a beat on the sales figure. Q3 EPS guidance coming in light by 4 to 5 cents. Sales guidance coming in line. Fiscal year EPS guidance is still higher than the estimate by 20 cents, and the fiscal year sales guidance is in line.
Stock is off the pre-market lows. That's the good news. The bad news is it's still down $3.50. And somebody was in the chat was mentioning it. I think it was Jared was saying, or no, Spinner was saying actually. He was talking with Jared in the chat. It ran up a lot in the report. Completely agree. It really did. I mean, we look at it from the beginning of August, 135 up to 155, closing near the highs into the report, which means traders, it has to blow it away. And yes, the numbers were good. Yes, they almost kind of did blow it away, but it's still selling off. So it's just a matter of everybody was too positive going into the report, and the numbers couldn't meet those exceeded expectations. Stock is still fine. I still think you find buys below. If it gets anywhere near 145, I think there's all kinds of buyers on this one. I think when we look at this a month from now, I think it's probably back up at the highs and maybe sooner than that.
We're $3 or $2.50 off that pre-market low of 148.42. As Dennis mentioned, the stock had a nice run here. I see 48.50. That's right there. You're near your pre-market low. That was Friday's low, $2.50 here. So keep an eye on that. Below that, another $2 drop to 146.07. And I mean, there's some green candles here. It's got some work to go green on the session. Yesterday's close was its all-time closing high at, boom, what was that high? Oh, 154.80. So to fill the gap, 153.05, that's a couple bucks away.
Got a couple retailers going in opposite directions here. Gas from last night trading up. Abercrombie and Fitch, ANF trading down significantly. Let's pair these ones up, Spencer, and do those reports together.
All right, so guess we'll start with that. GES reporting yesterday after the bell. Q2 adjusted EPS 36 cents. That was versus a 32-cent estimate, so a 4-cent beat. Sales 646 versus $650 million, so a miss on that. So a mixed Q2 report. Q3 adjusted EPS guidance coming in light to in line, we'll say. The high end of the range was the estimate. Sales growth 9 to 10% for the quarter. The fiscal year EPS guidance is light, and the sales growth for the fiscal year at about 9%. So to summarize, guess a mixed Q2 report and okay, but not great Q3 guidance. And what was the other one you wanted to do?
Abercrombie and Fitch.
Okay, A&F reporting. Oh, wrong symbol. A&F reporting this morning here. You have Q2 EPS 6 cents versus a 4-cent loss estimate. So huge beat on the EPS. Sales $842 versus $845 million. Slight miss there. They reported that sales comps for the quarter increased 3% at Hollister, 4% at Abercrombie. And for the fiscal year, their comp sales are going to be up 2 to 4%. So a better report for Abercrombie, I would say, than for Guess.
And here the stocks are going the exact opposite to that, with Guess being up and Abercrombie being down. So it goes to show you sometimes the numbers don't mean that much. What I will say is the sales were light. They seem to care more about sales than anything else here. So Abercrombie sales were light, and that's why we're seeing its stock down 11% here. But these things are funny, man. It got a little lift on the initial number, and then they just shellacked it. So I don't know. We seem to have a retailer go down 20% or up 20% every single day. Abercrombie and Fitch would be your best candidate to go down 20% because it's down 11. I don't know if it's fallen that far. And if you look at going the other way, Guess is definitely not going up. I don't think 20% is only up 8. So somebody's got to make that 20% rule, don't they, Joel? There's always a retailer moving 20% in one direction or the other.
Sometimes both ways, like what Tiffany did. I don't know if it was 20% both ways.
You just want to rub the Tiffany bet in again on me. You had to bring it up. He wins one bet for me in the last year. He's got to bring it up. Okay, go.
23.54. That's your pre-market low. You are, a buck off of that. And then I switched to my daily chart here, and I look at those lows that you had at the end of July. They were at 23 even. You had the hard double bottom, and then you had a bunch of lows in the 23 handle. So all the shorts that have been hanging out here since late July, they took their pain in July and August. I think they'll be out there. I wouldn't know if I'd be a natural buyer for a long here, but this thing gets under.
You got that fade trade going right now, Joel, but you're hot with that fade trade. After that Tiffany's call, I'm not fading Joel Elconin. I'll tell you.
I'm not. I said I'm a buyer. I'm a buyer here if I was short. If I was trying to long.
Buyer, though. And that kind of means you're still a buyer. Even
I'm a buyer.
Not sure. You'd be more of a buyer than a seller down here. And after that Tiffany bet, I tell you, I'm not fading you. So maybe look at that. Maybe it doesn't go down any further.
I don't know. I just look at the windfall. Wow, Tiffany's really got crushed yesterday too.
Yeah.
Look at it.
Whoa.
Gosh.
Don't chase.
Okay, and then the other one was
I chased you on that bet. That's why I lost.
Let's see here. You are off your pre-market high. Stopped at a whole number. You just didn't know which one. 26 even.
That was crazy. I did see it go up that much.
And then here you are at 24.77. I think it's important for this to hold above 24 1/4. That was the recent high, the move. It had a real bad day off that. So, I mean, if you're holding this one and you're looking for more on the upside, you're buying near the open and near this level, just be aware. And last time it traded in a 24 handle, it really caught a cold and sold off hard. So we'll see if there's any profit taking here in Guess. And just the Abercrombie and Fitch, I can remember when they weren't a clothing store. They were like a unique store. They sold like crazy books and globes and all that kind of stuff.
Holy cow, you're dating yourself.
Do you remember
so bad. No. What
You
is
don't
this,
remember
the
that?
50s? Is this in the 1950s?
Come on, someone in the chat, help me out, Spinner.
Are you 100 years old?
I'm over half that.
Anyway,
All right.
I don't. Either he's just really old to remember all this stuff, or he dreams it up in his sleep. One or the other.
Come on, someone in the chat help. I know Spinner. There has to be someone here.
I think you're getting crickets on this.
We got it. 8801.
Wikipedia. You're probably right because you're just old enough to remember all this stuff, and he has that long memory there going. He's got that good memory still.
Okay.
So, all right, and okay, so candidate for the 20% rule also is Signet Jewelers, SIG. And the 20% rule is a bit of a joke, but it's not a total joke because it does seem like every day we get a retailer up or down 20%. So we're trying to figure out which one can go to 20. Now, after the Tiffany's trade, I don't want to buy anything that's up 12% because we can see what happens. And if the fade trade's still hot, maybe they all come back in. But up 13%, SIG getting some love here.
Yeah.
I mean, this was a stock that was absolutely hated going into the report. So if they had said anything okay, it was probably going to rally. SIG, what were the results?
Well, they blew away the report. The Q2 EPS was 52 cents versus a 21 cent estimate. Sales 1.42 versus 1.34 billion dollars. They're also raising their guidance for the fiscal year. Sales guidance was raised from 5.9 billion to 6.2 billion on the low end of the range. EPS guidance for the year was raised from $3.75 to $4.05 on the low end of the range. So a 30-cent raise on the EPS there. And I mentioned the huge EPS beat from the past quarter.
This is Jared, right? Is that their main brand, Jared?
They got a lot of brands, but that is one of them.
Yeah. So this nice pop here. I mean, again, I actually wanted to go long in this into the report. I was actually long it last night, and then I sold it after hours because I got scared. But it was straight down in the report. So like I said, if they were going to say anything right, it was probably going to rally. And so you're seeing up significantly here. I don't know what the short interest is on this. The stock was very much in the doghouse back in May, and then obviously had a nice summer and rallied up, getting all the losses back from the last week or two when they decided that they was going to miss. And everybody who obviously thought that was going to miss in the last 5 days is dead wrong. So it's come back up. But I don't know, SIG, Joel, I'm sitting my hands here.
16% short interest.
Couple things here. One, the street was really leaning the wrong way into this one, huh? When 64.60, we traded at on August 22nd, closed at 63.91, and then they sold this thing off hard. And didn't you say that there was wasn't there a seller in the pre-market here? Someone dumping some shares, Dennis?
Oh, after hours last night.
After hours?
Yeah, they were dumping. That's when I bought. I bought it $1 down. I was like, I'm getting a nice lead. And then I was like, they just kept relentlessly selling. And I actually popped up a little bit where I was actually able to make some money on the purchase from last night. I was like, you know what? I don't want to hold it through the report. So I took the money and ran. Should have held it through the report.
Yeah. Whew. You got a big spike, 65.40, and now you're leaking here. I'd keep an eye on 61.12. That was the low after you made the high. I mean, how many buyers in the 1, 2, 3 last 5 days are looking up at, I can't say stocks Valhalla and saying, thank you, Lord, for this.
A little bit of that.
Yeah. I mean, that's what I would do. I mean, what if you bought, you bought it on a pullback. 59. Oh, no, 58. No, 57. No, 56, 55. Oh,
to get it all back in one day.
I mean, that's for me. I mean,
yeah. That's how you were playing the Tiffany's, and it worked out.
Yeah.
You were saying the same thing. So it's Tiffany's all over again here to a certain extent, minus the fact that Signet has big short interest, DC pointing out 16%, which is somewhat significant. So I'm still torn because I've seen retailers do.
Yeah.
I think there's easier money. I like picking low-hanging fruit.
Yeah,
this is not low-hanging fruit. And that's how I've made my living for the last 20 years, picking low-hanging fruit. Like selling short TRST, the wrong stock, when people are all buying it up, that's low-hanging fruit to me. I will do that. Trying to call whether Signet's going to continue this rally here when it's up 11% or give it all back. That is not low-hanging fruit. That is, I got to climb the ladder, really high. Hope I have my ladder set up really well. That obviously I doesn't, or I hope I lean it against the right branch, that the branch isn't too light and it breaks on me and I fall to the ground.
For one little piece of fruit, right?
Yeah.
And also, I don't know what kind of.
Well, it could be a big piece of fruit.
Yeah.
It's a juicy. When you buy and say, or when you're buying or selling Signet Jewelers, you're going to make some big money. You're going to lose some big money. So it's probably the nicest apple on the tree up there you're going after. But why not eat all the other apples first?
Right, but don't you only have maple trees in Canada?
This is maybe one of the worst digressions, tangents we've ever run.
I'm sorry.
We're talking about picking apples and now tapping maple trees.
What if you own the 55, 56, 57, 58, 59?
Selling the stock short right now against it. That's what I would be doing if I had those. That's what I would personally be doing. And then I'd be able to participate if the thing pulls back and pulls a Tiffany's.
Real quick, before we go to Burlington, Jazz is talking about AMD here, and I'm a little underwater in AMD. It popped off that 24 low, and it got a nice bounce. And I figured, when it was at just under the whole number at 25, I thought, you know what, this thing rebound off the low. Now I'm thinking it's going to take out the
shorted it.
I did. Very small, and it's kicking my butt here. I'm looking at the high close in the move in AMD. The high close in the move has been 25.26. Closed just below it yesterday, 25.20. So we get another close above that 25.26. I'm going to have to depart with this one. If in fact, and this is the thing about support. I mean, I was thinking, next time it goes down to 24, it's going to take it out. Well, wait till it goes through 24.04. So
you jumped the gun.
I jumped the gun. I'm really concentrating on making, if it makes a new all-time closing high today. Okay, let's go to Burlington.
Another definition of not picking low-hanging fruit here. Your AMD trade or any AMD trade at this point, this is a coin flip for me. I mean, we had a blow-off top 3 days ago. Now it's trying to do some work. And like I said, if you look back to July, we had the similar situation. The blow off top when we got over 20, then we had to do work for 2 or 3 weeks. It eventually took it out and went higher. It could do the same thing here, but right now there's just not enough information to understand if that's an upside capitulation high or if it's going to do more work and then eventually climb higher there. I don't think it's easily getting back to 27 though. So that's one thing I will say. I think as you get in the 26s, you find sellers, but in the 25 handle, that's a tough call.
Yeah, and I mean, it's not like I did the weeklies or even the next. I gave myself a little bit of time.
You did it with options too.
Yeah, I did it with some options. I gave myself a little bit of time, so I'll just watch that premium decay. But
Burlington Stores reported earnings there this morning. The stock was getting bid up last night ahead of the report. Those people were wrong, and the stock's down 4% here. Spencer, details BURL.
Yep, a case of pretty good Q2 numbers, but not so great Q3 guidance. So the Q2 EPS, $1.09 versus a 96-cent estimate. Sales of $1.499 versus a $1.5 billion estimate. So in line with the sales and a beat on the EPS. Q3 EPS guidance was light, however, $1 to $1.04 is what they said. $1.06 was the estimate. They did raise their fiscal year EPS guidance, actually. So that's a good headline to see. $5.90 was the original. $6.13 is the new fiscal year EPS guidance estimate, and that's 10 cents above the estimate from the street. And their sales are going to increase about 10% for the year. So that fiscal year guidance raise sounds good to me.
So the $40 stock back at the beginning of 2016. So just going over 2.5 years ago. Now $166 stock. So you're talking about a stock that has quadrupled in the last 2.5 years. So if you think you're buying it on the cheap this morning when it's down 4%, it can go a lot further down. I'm not saying it's going to do that. I'm probably not making a trade on this one. Trend is still your friend. The trend is still higher. There's probably still underneath demand there. But if you're coming in and sticking this in your investment portfolio and say, how can I go wrong? You want to look what the stocks have done. And I would still say that this is pretty much priced to perfection. The retailers have been hot. This has definitely been one of them. It's definitely got, the wind in its sails, probably still even after this quarter. But that stock move has been incredible in the last 2.5 years. And I think if you're buying it up here now, I think you're late to the party.
Way off the pre-market low, got way overdone, pretty 153.84, 83, and then now we bounced quite a bit off that $6, $7 off that low. That low, you had some lows in the 154 handle, 154.30. It got a little bit, let's see, what was the low again? The low was 153.83, so 153.40 was a good buy. I just think when you're that far off the low, I'm not thinking this thing's going to go green today or anything, but all those shorts, once again, just taking the contra theory here, you've been short this thing since early August, and I could have bought this at 154, and now it's at 160, so
they cover.
There's going to be some backing and filling in here. Long ways to go to fill the gap. You need to get that 163.25. I mean, if you're trying along here, and if you're looking for it to get into yesterday's range, I see resistance at 163.25.
Caleb, follower from my Twitter, is wanting to know about PYPL. I can actually, here, I'll just read you what he wrote to me. PYPL, where are you there? I'm just scrolling through. Can you please give me your thoughts on PayPal? Is it overpriced at $92.62 or still a good value in your opinion? Thank you. I can give you my thoughts just by looking at my portfolio. It's in there. So I actually bought this recently. So I think it's going $100. I don't know if it's doing it today. I said yesterday on Amazon, I think it's going 2,000. I said, not today. I didn't mean, even though I should have said, because Amazon ended up almost going to 2,000 yesterday, which is insane. We'll talk about that in a second. I think PayPal is going $100 here, and I think it's sooner than later. I think pullbacks are going to be bought. It's got a rating here. Berenberg coming out with a buy rating, put a 104 price target on it this morning. So it's bucking the overall market trend here this morning, trading up 30 cents here in the pre-market, thanks to Berenberg. Valuation's a little bit high for me. I think it was trading 30 times, which is a little more than I like to pay, but they do have some growth there too. So I like it. It's still got the story. I like the chart. I'd buy pullbacks on this. I don't like to chase things, but I'd be a buyer of pullbacks, and I own it.
Yesterday's high 92.94, opening in right into that level because you closed at 92.62. So keep an eye on that all-time closing high here, 92.62. See, I mean, the SPOOs are a little bit weak this morning. I don't know what the beta is on this stock or whatnot, but, see, maybe there's a seller at 93. Just happenstance here because you had like a $2 run up from a 90.78 low. So maybe some paper at 93, 93.5, 94, using half and whole numbers. Can't really make a projection there on the target. Obviously, the Square News really helped it yesterday, right?
Well, it had its own rating yesterday too. I've got to go back to my sheet from yesterday, but there was something on PayPal. What was PayPal yesterday, Spencer? Goldfish memory here, but there was something on it. Somebody raised a price target or something.
Well, they had news. Wait, what was yesterday? Wednesday? They had news like during the day that
there was news in the beginning because I bought the open because of that. So I'll take you through a day trade of mine if you want. We don't often do this, but I looked at the news, and when I can buy a stock on the cheap, Square was way up, so the sympathy was going to help it. But there was a positive headline as well. It was an analyst commentary. Somebody raised the price target.
Yesterday. Oh, that was Guggenheim.
Yeah,
that was Guggenheim.
Guggenheim raised the price target, right?
Yeah, and they named it their best new idea and $100.
There you go. So the way I play that is if I can get the open on the cheap, I'll buy it all day. And if you look yesterday at the open, it actually opened at the exact low tick. So it only opened up, I think, 20 cents. I was willing to pay up to 91.10 for the open. I have my orders priced OPG 91.10. I put another one, I think, at 90.90. I got filled in both of them at 90.78. I was immediately up, and it never took a penny of heat. The stock was 92.5. 5 minutes later, or 91.5 5 minutes later, and then obviously scalper blood me. I sold too soon. I always do that with my day trades, but I think I ended up making 90 cents on some of those shares. It was a pretty good trade, for being in at 5 minutes. And then I continued obviously going up there and went all the way up in almost 93 handle. It's touching 93 here this morning, but still long in the swing portfolio. Still long, or it's kind of in the more investing side of the swing portfolio because I'm trying not to look at it. And I had the day trade on yesterday. You know what? It's got relative strength here today. I might try to play it long at the open here again.
Okay. All right, Square.
I've got 3 different people right now telling me that EA is halted. So just so we're clear,
EA
is halted.
It is halted.
News pending. Don't know, obviously, what the news is yet. They're not due to report earnings today. So this is out of the blue. Oh, here we go. They just announced a November 20th launch date for a couple new games, and they updated their expectations for the fiscal year. Let's see if I can read this release while I talk.
Always tougher when you're trying to read news live while doing a live video show.
This is tough. They're updating their fiscal year 2019 net bookings guidance from $5.55 billion to $5.2 billion. I'm not going to get into why.
I don't know what that is, but
they took it up or they took it down?
No, they're lowering it.
They are lowering it?
Okay, so say that again. Because
they are updating. Where is it again? They're updating their fiscal year 2019 net bookings guidance from $5.55 billion down to $5.2 billion. And about some of that is due to foreign exchange rates.
What does that mean? Their bookings. I don't follow the gaming close enough. What does that mean? Bookings.
Net bookings.
Like it's not like a.
Hold on. We're currently evaluating the impact that this will have on our fiscal year GAAP guidance. They're going to provide that information on the next call. So they're reaffirming their second quarter operating guidance that they gave at the end of July. All right, this isn't like huge news or anything.
It sounds like bad.
They halted the stock for it, so there's got to be some significant news here. And we're not going to try to just interpret it all live. Here we go. They're also moving the launch date for one of their bigger properties, Battlefield 5. They're moving up the launch date by 4 weeks. And okay, so this isn't like anything.
A lot of news. I'll just give you the low of the move here. You did have some buying around 124.66, 125. You're $4 away from that. That's the low of the move. You look at it, it's been hanging out here, maybe some accumulation. On the other hand, it hasn't really been able to distance itself off the lows. So probably get some good trading action in it. We'll have to see how it comes out. Buy Apple say EA Battlefield 5 game pre-order is slow. So doesn't look like good news here. We'll see how it reopens.
Yeah. So we'll get an open date here or open time when we get it. Let's move back to the earnings parade here because we digressed once again, which we always do on this show. Let's go to this morning. Let's go to Michael's. Let's go to Scrapbook Store. You know what? Scrapbook Store trying to bounce back here from the lows, but me and Joel, we just don't like Michael's. I don't know why, but probably because we don't like paying $30 for a pair of scissors. But anyways, Michael's, it looks like it disappointed, but it's trying to bounce back.
You just don't appreciate good scissors, but the Q2 EPS, 15 cents was the EPS.
Or $20 for a crayon, or anyways, I digress once again.
15-cent EPS has a 2-cent beat, sales of 1.05 versus 1.06 billion. So a mixed Q2 report. They are raising their guidance for the fiscal year. Fiscal year sales guidance coming in at around $5.2 billion, which is still in line with the estimate. The Q3 EPS guidance, 42 to 45 cents is the range they gave. 51 cents was the estimate. So a miss on the Q3 EPS guidance number, a slight raise to the fiscal year EPS guidance number, and a mixed Q2 report.
Okay, that's all a head scratcher. Lots of battle in the same report. The stock got down to the 18s. It has bounced back. It has some nice bids forming here now and not a lot of offers. So it looks to me like a candidate that could actually get the majority of the losses back. I know it just traded in some off exchange in 1979. Best offers at 1970 and the best bids at 19. So still kind of in the lower 19s is where I would really put the price here right now. The spread is very wide. I'm not trading this though. And it's another one that's just a hard one to call.
Yeah, back down at the low of the move. You had a low of the move at 1890. This was back at the end of June. You exceeded that level just by a little bit. So I don't know. Now you're back above it. I'm just more of a back and fill candidate. If in fact you get down to 1845, 1850, though, that's where the initial buying started. And they stood there for about an hour before they upped their bid. So it looks like you got a natural buy there at 1850.
And then we had some analyst action here. Tilray Lobster letting us know is catching. It looks like a downgrade here from Roth Capital, TLRY, which had an incredible move yesterday. I mean, he's talk about overextended. nothing's more overextended than this. I mean, this is a candidate to get Citron here eventually. But anyways, TLRY is trading down $3.50 after a downgrade there. I'll just read you from Lobster, who's in our pre-market Benzinga chat there. It says, while Tilray, this is from Roth Capital, while Tilray reports strong results and appears to be on track for a very impressive 2019, analyst believes that the stock current levels reflect a highly speculative M&A scenario following Constellation's $4 billion investment in market leader Canopy Growth. He tells investors, though he cut his rating, and he did raise his price target from up to 54 from 35. So it looks like a downgrade, but he's not that bearish because he's raised his price target up to 54. So I don't know. This, again, is very tough to call these things day to day. It seems like it's up 10%, down 10% every single day. When the dust settles here, maybe they get a big investment. Maybe it pushes them higher, but I don't. I think they could get that investment, and the stock might even not even go that higher. I think it's all priced in. So could it continue? Sure. These things can go forever, it seems like, but I'm not putting my investment money in it.
Yeah, Paul's pointing out 9 million in sales, and I think are 10 million in sales and 6 billion in market cap.
Oh, it's ridiculous. The valuation is just absurd. You can't even look at it on evaluation metrics here. And usually when these things, the dust settles, they usually do come back down to earth. But this is blasted off since Constellation. It was that day we talked about yesterday on the show. Constellation put the investment in CGC, and none of these pot stocks have looked back ever since. And then when Diageo is sniffing around, they all think Diageo is going to come and buy them all, apparently, because they all just go up 20% every day. It's just overdone. It's just overdone, in my opinion. If I was in these things, I would have rung the register a long time ago. But I'm not in these things. I'm not looking to trade these things. Again, this is not low-hanging fruit. I mean, it could come out, a rumor could come out tomorrow. Diageo is looking at Tilray. It could be up $20. I mean, that's just the way these are headline driven here right now. So any type of rumor out there really drives it. Rumors don't materialize. You get a downgrade. It's down 6% on a downgrade. That's even a bad downgrade. So it's very tough to call these things day to day.
Not a lot of trading going on here. Let's see a little bit. No, there is a little bit of volume.
Yeah.
Your all-time closing high, 62.13. So that could be a mark, 62.90 high. I think there's a lot of people sitting on a lot of money on a lot of longs here, a lot of cash, $24 on August 14th. I don't think you get a lot of heavy selling until you take out 56.25. That was the low from yesterday. And then your next daily low is a full $6 lower. You had two lows at 49.5.
How do you control the risk on something like
you can't.
this? Like, that's the biggest thing. It's going to trade with 50-cent spreads. It's going to move $1 in seconds. I mean, it's very hard to control the risk on a trade like this. And that's why I don't like trading this kind of stuff, because I don't think about I never enter a trade thinking about how much money I can make. I always think about how much money I can lose first. And you obviously can lose the whole thing, but how can you control the risk? On certain stocks, when I'm trading stocks like Pfizer, you can kind of control the risk on it. You're probably going to get out, you can get out within your stop within a couple of pennies. You could put a stop on Tilray and get executed $2 lower. I mean, stocks just moves very, very quickly there. So it's difficult to control the risk. And I'm not saying don't trade this stuff. If you make money trading this stuff, continue to do it. I'm just saying if you're a newer trader, this is the toughest stuff to trade.
Yeah, and also big volume over the last 3 days. So I think best hope for bulls would be, just to hang in here and, not go down a lot, hold that $56 level. A lot of shorts underwaters too, but nice volume day. I think that was the biggest volume day it's ever had. 18 million yesterday, all-time closing high at 62.13.
Jump over. We'll move away from the pot stocks for a bit. Let's jump over to more earning stocks. We got $2 stores. Let's do them together. Dollar General and Dollar Tree, both reporting earnings. We've got both of them getting hit here this morning on their results. It's not a good day for retail on the earnings front. Spencer, DG, and DLTR.
Our own DG first. Q2 EPS $1.52 is a 3-cent beat. Sales 6.44 versus 6.37 billion. So beats on the Q2 figures. Comps for the quarter up 3.7% year over year. They are also reaffirming their fiscal year EPS guidance at a high $5 to low $6 range, and raising their fiscal year sales growth guidance from 9 to 9.3%. So on a year-over-year basis, so 0.3% guidance raise on the sales. That's Dollar General, so mostly good there. Dollar Tree, Q2 EPS $1.15 is in line. Sales is in line. Dollar Tree Q3 EPS guidance is in line. Sales guidance is in line. They narrowed it a bit, but everything is in line for Dollar Tree. So Dollar General seemed like it was mostly good. Dollar Tree was in line.
I don't know. These two stocks just tend to move together. So, you can like one more than the other. And Spinner pointed out Kramer likes the one over the other one. I don't know anything about that. I just know these two, I pair trade these things together all the time. Sometimes they can digress from each other, but when you look back, they do tend to move together very closely. I mean, Dollar General has been a bit of an outperformer. It was making new highs. Dollar Tree hasn't. But day to day, these things tend to move together. So that's why I like to couple them together. Dollar Tree getting hit harder here this morning. It's down $5. These things, again, have had a nice run. They've run up into the numbers here. So expectations a bit too high. I mean, Dollar Tree in the last month has run up $10 into the number. Dollar General, same story, had run up over $10 into the number as well. So not surprising these things get back when they don't blow it away.
Have you ever spent $1 in a dollar store? Oh, that's right.
I was in Dollar Tree last week. So yeah, I have actually.
Oh,
and I went there. This is the best place to take your kid. So, you take them, Toys R Us. Well, nobody goes to Toys R Us anymore because they're out of business. But, I mean, you go to any other department store, you can spend a lot of money. Well, when you're a 3-year-old, he just wants to get something. So I take him to the dollar. Like, want to go get a toy? Take him to the dollar store. And he just looks through all and roots through it all. And I'm like, well, pick yourself out a couple of toys. And so we go through the whole thing and uproot the whole store because he's a 3-year-old. And, he's looking at everything. Looking at all the toys. You want to know what he comes out with? A roll of yarn and a roll of tape. So all the toys they have in there, he comes out with yarn and tape, and then proceeds to come home and he strings up my entire living room. He's got it just like strung from you walk through and it just looks like string everywhere. A cat walks upstairs, trips over the string. It was just a debacle. It takes me a half an hour to clean it all up, but kid had fun with the $1 roll of yarn.
That cat still sticking around? Hasn't tried to run away yet again?
Oh, he tries to run away.
Okay.
With a 3-year-old. He's actually now getting to the stage where the 3-year-old doesn't care about his cat anymore. When the kid was one, like my 1-year-old daughter just loves the cat. The cat comes upstairs, she's like, "Dap, dap, dap," because she can't say "see." So she goes, "Dap, dap." And she's so excited to go see the cat. And the cat's like, "Oh no, here it comes."
All right.
They're not gentle. The toddlers aren't the most gentle things on the kitty cats.
Dollar Tree's not bouncing here. You have a little, someone's putting some bids out here under $89. $88.55 is your pre-market low. I'd be looking a little bit lower than that. I see a bunch of lows. Let's see, 3 or 4 lows from like 87.5 to 88. So if you're looking for a little bit more, but if this thing doesn't keep going lower off the open, these stocks are wild. They really move around. So see if you can catch it early. If it continues down off the open, you want to cover short, maybe a blind bid at like 87.50 might get picked off. DG, Dollar General, that spiked a lot lower. 10060, but it's off that low. Once again, you had a low in the $100 handle, $100.63 on August 8th. So these things do move here. So trade them at your own discretion.
Forget where I was going now. I actually just was going to talk about a stock, and now I forget where I was going. Help me, guys! I can't remember where I was going.
What movie is that from?
It's not from a movie. I'm trying to remember what. I got distracted with the trade. I actually had a good stock to talk about.
You want to do?
All right. Anyways,
PVH, was that the one?
No, it wasn't PVH at the point, but we can talk it. It's down 78 cents. Campbell Soup.
Oh,
we should talk Campbell Soup.
Okay.
Because they had earnings and they weren't great, but now they're selling part of the company. Or apparently selling part of the company, and they're still open to selling the whole company, although it doesn't look like there's any bidders. CPB trade down 77 cents. Give us the details here, Spencer, because I can't even follow these headlines out of this one.
Yeah, so I guess I'll read the earnings first and get into the selling part after.
Sure.
Q4 EPS 25 cents, beat by a penny. Sales $2.2 billion is in line with the estimate. A slight miss, but mostly in line. Sales guidance for the fiscal year coming in light. high $9 billion range versus a $10.27 billion estimate. EPS guidance for the fiscal year also light. 240 to 250 is the range they gave. 269 was the estimate. Then the news that they are selling their international unit. They're going to focus on Campbell's snacks and Campbell's meals and beverages in North America specifically.
All right. So, and I saw something about them still being open to selling the whole company, but nothing has materialized there. And I don't know if anything is going to. It's trading down 1.8% here in the pre-market. I don't know. It gets rocked. I mean, there's still the potential for a sale on the table. It is a food stock. Food stocks are starting to fall completely out of favor here again. If you look at Kraft Heinz, well, I guess they're kind of holding on, but they're definitely not risk on, and this is a full risk on market here right now. So why are you going to go buy a Campbell Soup for 3.5% dividend unless you really think it's getting taken over, when you can go buy Amazon, which goes up 3.5% a day? So, and that's where I wanted to go, was Amazon to talk as well. We'll go to that in a second. But quick thoughts. You know what, CPB, I think there's underneath demand here because I think there's still people speculating there could be a possible deal. So I don't see it getting slaughtered here today.
Yeah, very little traded. It got 37, 35, and you bounced back up. Got over $40, so $3 rally. Not much traded at that level. Recent low of the move when the deal was off was 39.29. You are sitting here at 39.28. If you want to buy this and you buy this off the open, you want to see 39.60 in a heartbeat. If not, you are taking out the new low of the move. And, I don't know where. I don't think we'll see our pre-market low down at that area. But, man, you're just sitting at the low of the move down 71 cents. You want to see those buyers move quickly here. I see more downside here for Campbell Soup. Real quick.
Amazon, we were going to go to.
Go to Amazon, bro.
Let's go to Amazon. So yesterday, I made the bold call of saying it's going to go to 2,000 eventually. Did not make the bold call, and wasn't very bold because it was already at 1950. I had no idea it was going to do it yesterday. It didn't quite get there. It got up and just closed near the highs, 1998.68. It has traded over 2,000 in the after hours and pre-market session. Full disclosure, I actually shorted it up at 2001 this morning. This is just a day trade because my thinking was, I don't think it opens over 2,000. I think there'll be an institutional seller, somebody willing to sell it. So I was just gambling that I could buy it under 2,000. It looks like I'm going to be able to do that. So I intend to cover this overnight trade at the open here, hoping to buy it under 2,000. It's now 1998.60, but again, the S&Ps are down a bit, so I haven't covered it yet, but I'm thinking about covering it here. I will cover it before the open or at the open.
It's trading right at the all-time close, all-time closing high. 1998.10, 1998.69 was the high. Doubled the volume yesterday. That analyst got it going, and you got up to 2001.87. And if you want to, if you're looking for a rally above here in the after hours, someone did not move off that level. They were at that level from 19 even, so that's at 5 o'clock until the close. So big seller, 2001.87. Just call it 2,000 there is the resistance, and you want to see it hold the close here, 98.10. Yeah, it's actually below, Dennis. Maybe see if it wait till it goes green on you.
Yeah, and it could hold. Maybe it doesn't hit 2,000. Maybe I just sold the all-time high at 2001 in the pre-market, but I think it's hitting 2,000 here today. So I have full intentions of covering this at the open because I think it's hitting 2,000. Okay. I mean, it's $2 away. It's going to hit it. So
it already did, technically, right?
Well, kind of, but Tesla, let's talk Tesla. It's getting weak here again here this morning. Yeah, this hasn't been a good one. I wasn't convicted. I put on a speculative position, which means speculative capital, which means a small investment. And I was up in it for a couple days. It's now turned red on me. It doesn't look good. I don't know. I talk myself into it. I look at it in the portfolio, and it's funny. It's like 0.0, like it's not even like a fraction. It's like a fraction, less than a fraction of 1%. It's like not even a fraction. It's like 0.01% of my, or 0.1% of my portfolio. So a tenth of 1%. It's that small. And it bothers me that I talked myself into buying even any Tesla here. I totally talked myself into this. And I thought, and I still, I don't know what I think on this. I'm torn. You do your talking on Tesla because you know what? I have no idea.
I don't know.
Valuation's ridiculous still, but I talked myself into buying it somehow.
I think
it looks like it was wrong.
I think they lost an exec and I think a human resources person. I mean, now that the bid is out of there, I mean, I don't know. Maybe Jeff Lower. I mean, they got to start making some cars, you know? And
they are. They got to get profitable. That's going to be the key. They need to be profitable. I think they're profitable next year. Does it have, a sell-off before then? Maybe. I think eventually the stock starts to get love here again. From a value, you can't make sense of it from a valuation perspective. And I don't know why I'm in it because I'm a value investor. It really makes no sense that it's in my portfolio. I think I just wanted to buy it. So bad reason to own a stock.
Patterson Dental here. They had support earnings, asked about it in the YouTube chat. Getting tired here, down 383. You made a pre-market low at 1940, but it's trying. I mean, I do see a green candle here. So 1940 is your pre-market low. Going out a little bit longer term on this one. Where did we touch here? During the financial crisis, we took 1975. So best case scenario, it holds that pre-market low and gets a little bit of a rebound. Not a great report. Your other monthly low, and actually there were two monthly lows here right at 1970. This was May and June of 2009. Your other monthly low is 1815. Don't follow the company real closely here. Got a green candle. You want to see that persist.
Jump over. We'll just keep going through the couple of stocks we're going to report here tonight because Lululemon is widely followed. Everybody's expecting big expectations for this. It's had a huge run into the earnings, so a little bit of caution there. But Lulu tends to blow it away. So I don't know if I'm necessarily going to short it just because expectations are high. I mean, they tend to blow it away. So I think I'll probably sit on the hands going to this one. Ooh. I was long it a couple of times here this week, just playing it for the potential of a run ahead of the report. It really didn't materialize. So it really hasn't materialized. I mean, maybe it does here today ahead of the report, but you know how I like extracting that alpha from, buying the stocks before the event and selling it before the event. In this case, it hasn't, really happened. So anyways, I'm out of Lulu right now. I think I'm probably sitting it out for the earnings.
I'm just looking at the low from yesterday, 135.08, and I see a couple other lows flanking that area, and 134 handle, upper 134. So just keeping hands off 135. You can see a lot of room underneath that. Coming back on the upside, I expect to be a little bit of a battle drawn here at the close. 138.70, 138.94 was your high. And if it really goes into rally mode, the all-time closing high is 140.42 there in Lululemon.
Dropbox, we got a request from Matt and Beyond. DBX did have the lockup expiration. It's hung out here for 4 days since then. Oof. It's not going down, which is good news. And it has 4 lows in the similar area. Like you've had the original low back in July, 26.61. Then the lows from last 3 of the 4 days, 26.50, 26.52, and yesterday was 26.75. So it's formed a hard bottom. You know where your out is. If this thing starts cutting through 26.50, I want no part of it. But if you're looking at it and saying, I think it's going to hold, well, you've got a defined out. So I can't argue with you there. I think the longer it hangs out here, I tend to think it's going to resolve itself to the downside. But, I mean, support is support until it's broken. So if you're buying it here, it's kind of low risk as long as you get out if it cuts through 26.50.
Yeah, I concur on that one. It's DBOX, right?
DBX.
Oh, DBX, man. Dyslexia.
It should be DBOX, but I think it's I went with the 3.
Hanging out near the lows of move. You never like to see that. Your old time low was made last month. Dennis just talked about that. No, it was this month at 26.50. So there's low on that. And then I just want to cover box here real quickly. It's hanging out in the lower quadrant here. It is up 14 cents at 20
BOX. We moved to.
BOX. Right. Hanging
Killed
out
after earnings.
Yeah.
It could have the earnings hangover here for a few days.
Yep.
Just watch. I mean, there is some support there. Joel's giving you a good area, 23.50. Made multiple lows there back at the end of July. So there is some support down here, but sometimes these things have a hangover for a couple days when they disappoint. So I don't think it's bouncing back here in one day. That's what I was saying.
Okay, 854. Spoons are just kind of bouncing around here. We're down 4 points at 1075. You know, you got the good levels to look at on the upside. You had your all-time closing high at 1475. Your pre-market high is right there, 16 and a quarter. All-time high made at 1750. That was Wednesday's high. So your resistance is much more well-defined than your support, your pre-market low at 2807. Dennis, I know this is kind of late, but we really blew by in balance time. Did you see anything worth noting?
Go take a look. Ford, 433,000 to sell here this morning. Full disclosure, we have a little long day trading for it, so that's not working out. GE, 167,000 to sell. GE selling balance every day. Although GE had a good day yesterday. Actually, you know, last week really, it's kind of started to show some life there. Bank of America, 143,000 to sell. ExxonMobil, 119,000 to sell. CRM, which we've talked about multiple times in the show already this morning, 81,000 shares to sell in CRM. That's off earnings. Square, small buy and balance, 22,000 shares to buy. It was getting some love on fast money there last night, so it's trying to show some life. Wells Fargo, 58,000 to sell here. Just trying to see if there's anything else standing out. That's the bulk of the big guns.
Real quick, I saw this stock fly by earlier. STX, Seagate Technology, traded down 9 cents. You really want to see some follow through here. You got a seller in the 57 handle. Your last three highs, 56.91, 57.20, and 57.11. So the longer those highs persist here, could have found a short-term top here in STX. And I wish I could be as versatile as Dennis. I sold my Western Digital when I had like 77, and I was looking at all those monthly lows, and I'm like, this thing is just hanging out here too long. I should actually turn around and short it or buy some
puts. A good call.
But I didn't. It lost it. And remember when we talked a long time ago about, you know, when Seagate and Western Digital, that spread just went
I was just thinking that. You read my mind.
Yeah. Yep.
I mean, the Western Digital was blasting off and Seagate was going nowhere.
$40.
This was like, yeah, Seagate couldn't get a bid, and those two stocks used to always kind of trade together. I used to pair trade those things together all the time. Western Digital was just getting all the love. I mean, we're looking from 2016 when early 2016, Western Digital went from $40 to $80. That was just in 2016. And that same time period, Seagate, yes, it did rally, I guess, a little bit after the fact, but I mean, maybe 2017 is a better example, but there was a lag there big time. And it's funny, it's kind of corrected itself now where Seagate actually looks like it's been the outperformer here for a while here now.
That spread's really come in. Triple D, out of the Google chat, did you ever buy AMAT? You were looking at it.
No, I did not. It's still on my watch list here. Not getting off the mat, no pun intended here, though. It's hanging out down here too long. So it got the downgrade the other day. I thought maybe that was a buy. It actually was because it popped a couple of times off that downgrade. It's still hanging here. You still have it defined out. So if you're making a trade, I would say I'd stop out below 42.50. But you're only risking 50 cents right now if you use that for a stop. So it's not a bad setup for a trade if you think the low is in, if you think, you know, it's going to start to show some life. But the more it hangs out here, the more I think it's maybe not going to bounce out of here. Trend definitely not your friend. I mean, Applied Materials and RLRCX, which moved together, have both been big-time underperformers here in the last 4 or 5 months. When a lot of your techs are making new highs, these two stocks are not. So you're definitely buying the dogs if you're buying them here. But again, as long as you have a defined out, you can put any trade on. And I would say you do have a defined out with Applied Materials there.
Larry is looking for a 2-day rally in Hess. Oil had a nice day yesterday. It's flat at 67.21 here. You know, this is kind of, it had a down day, up day, down day, up day. We'll see. We did close kind of near the upper end of the session. What I'd really like to see, if you do get a rally going today, I'd really like it to clear 68.31. That was your high on August 7th. Crude is working in your favor. Found a little resistance at 70. I mean, this stock has not had 2 up days in a row since end of July. So yeah, maybe you got a chance here always want to see it go green and stay green off the open. Dennis, is there? I know we intermittently threw the ratings in there. Was there anything else significant that stood out to you?
Can I interrupt to say the EA just resumed and they are trading down as we thought they would. At ATVI.
That's a good hit.
ATVI was trading down on this news from a half hour ago that EA cut their guidance and delayed a game by 4 weeks, but they just resumed EA, and it did trade down as expected.
Okay. So this is hitting the sector here this morning. Actually, it's getting hit pretty hard here, 118.50 here right now, so it's significant. I still think, there's buyers below here. I think this e-gaming stuff isn't going away, but right now, I'll tell you that trend is broken here now. So it is concerning from a technical perspective. We tried to put in a hard bottom 125, and obviously fundamental news just took us right through that. Again, I'll tell you, technicals work well with no news. When you have news, technicals are meaningless. When you have bad news on the stock, it's usually going down no matter what the chart looks like. So here, it's got to figure out, it's got some work to do. I see room to 115.
Yeah, I was just going to say that.
Yeah, I don't know if it's going there or not, but that's where I kind of see room to. And man, there's some big offers forming here too since this halt. 120, 40,000 shares. Somebody just offered 119.50 for 40,000, although they're trying to lift them right now. So there's another 40,000. No, they just took them out. They just took almost all of them out of 40,000 there. So buyers below, it's trying to go back up to 120. It is active here right now, 177,000 shares trading, but I do see room to 115. Not sure if it gets there.
Okay. Yeah, I concur here. Pre-market low is, let me see, what did we just print there? 118.51. That was real quick. Looks like you're getting some buyers in here. Always a good bogey. If you're trying to pick a bottom or you're buying it here, would be the pre-market low. But we both came out with that monthly support at the $115 area. And that was a couple monthly lows that you had. This was back in April and May of this year. All right, Spencer, we're keeping you overtime here. I know you want to wrap things up and get on with your day. So why don't you do that and preview tomorrow's show?
Well, I don't know what tomorrow's show will hold. I guess we'll find out after the bell today in tomorrow's pre-market session. But if you missed any part of today's show or you want to catch any part of our archives, are all on SoundCloud, iTunes, Stitcher, TuneIn, and Google Play. You can catch shows going back to like 2015, I want to say, on there if you want to hear what we sounded like 3 years ago. Or you can just rewatch our show on youtube.com/Benzinga TV. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. We love the interaction. Appreciate it. As always, thank you for asking questions. We love to answer them. Just one quick reminder that all the information on today's show and every show is for informational purposes only and not meant to be investing advice. But that's going to be it. So trade carefully today, folks, as I hope you do every day. But hope you guys have a good day and hope you join us again on Friday.